Hello everyone. In today's video, basically the S&P 500, the last two times in the decade that the S&P 500 continued to rise like this, it went up around 4 to 4.5%. So currently we're only up around 2% in this move that we have right now. So in today's video, I'm going to go ahead and take a look a bit more in depth of those last few times. We're going to take a look at how much space the SPY has to continue rising. We're going to tie it all together. So we're going to be taking a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, and the bonds. All right, so without further ado, let's get started with the video. All right, so clearly this is a chart of the S&P 500 on a daily chart. All right, so what I've been saying was, technically we should fall lower, this, that, basically showing that in the past decade, there's only two instances where we were this overextended to an upside without getting a pullback. So currently it looks like it's setting up for that, and it doesn't look like we're going to get a pullback. So I'm going to explain the last two times where the SPY did make a pullback or did not make a pullback and continued to rise. All right, so the first most recent time was in April of 2021. So in April of 2021, it took 37 days. So what I'm currently doing is the breakout candle. I took a low of that breakout candle, and then I measured how high we would be rising on the S&P 500 before we end up getting a pullback close to this breakout candle's low. So it basically took us 37 days to end up retesting that low. And we came to a high of almost 5%. Okay, so that's the first instance. So currently what we're looking at right now is there's still a lot more upside left, right? So that's the first thing, right? The second instance in the past decade was also coincidentally in the same month-ish area. It was in May, I think. So the same concept, May of 2014, the lows here, right? It took 72 days to retest the lows, and we went up 4.2%. So both instances were over 4%, and this is still showing that there's a lot more room to go to the upside in terms of the SPY's bullish move here, right? And this is the third time currently. And basically, if we measure this, we're only up 2.2%. So technically, there is more room to go to the upside, right? We could go to 4%. So that means that there's around, at least technically, right, 1.7% gain to the upside. And like conservatively, if you're saying that we're going to get a 4% move to the upside, and how much would 4% be? 4% would make it around 463. And what is around 463? So around 463, right? This is going to fade away. So what is that 463? Basically at a 4% is a 4% move from the recent highs is this very, very important resistance level, and that's basically coincides pretty perfectly with that move to the upside. And this was the prior high back in March of last year, and it was acting as this is a very, very important level. So basically the measured move potentially should get to that level. Now that we're looking at this, technically, right, in my opinion, the safest trade would be, instead of going long here, now pragmatically, right? Obviously, we missed a lot of this move to the upside, but pragmatically here, you have a risk reward of, obviously, you could scalp bullish to the upside for the next month or two, right? That's not an issue. But the risk reward in terms of swinging is not really there, because we are currently at 454. There is around, once again, like a 1.8 If we go above 4%, it's going to be around a 2% gain, right? Because currently we're only up 2.2%. All right, the SPY currently from the lows, right? Let me just make this 1 second. Let me just go ahead and okay, from the lows, the SPY is up 2.24%. The past 2 times in history where this happened, the SPY went up 4.2% and then 4.8%, almost 5. So there is only around, even if it goes up 2 more percent, it ends up being 4.24%. But, right, the risk reward would not be that favorable going long, pragmatically, okay? Whether you want to believe it or not, if you think you're going to get a 2% gain, but you have support basically at 2% as well, I don't know. It's just not, you know, it's not a favorable time to go long. It would have been much favorable to go. So basically, this is the most safe thing that you could basically do is day trade along the momentum, right? Whatever the momentum is during the day, just day trade alongside that. And number 2, wait until we get to this level of resistance, basically. Once we start playing around 4.5%, right? That's when I think a lot of people are going to start taking profit, especially coinciding with this very, very important resistance. And then 465, 466 was a super, super crazy level of resistance when we were trading there. So yeah, how much percentage is that? Because that was like a really, really disgusting level. So yeah, that basically coincides pretty well with 4.5 to 5%, right? Things are going to get interesting. So up there, if we continue rising, that may well happen, right? A lot of people could go short here and then they could squeeze it up one more leg. But once we get to around 4 to 4.5% gain from these lows, that's when I think it would be the safest opportunity to start going short instead of going long, because this is definitely not technically an opportunity to start going long. The risk reward is not there. I hope that made sense. All right, so next, the dollar. So the dollar is very, very important because, as we know, the dollar has an inverse relationship to the market. If the dollar is strong or it's doing well, right, that means that the stock market is weak and it should be falling. Okay, so currently we see the dollar starting to show some sort of life. It didn't just break down completely. It's starting to be a bit green, showing support, bouncing a bit. This is a very, very major level of resistance, still at 100.5. So we have to see if the dollar can comfortably break above that level. Otherwise, the dollar is still very, very bearish. And as the dollar is bearish, the stock market will continue to be bullish. Okay, so there's that for the dollar. Next, let's go ahead and take a look at the 30-year bonds. Okay, so the 30-year bonds are relevant because they are correlated to the overall market. So if the bonds are doing well, then the stock market should also be doing well. And I was showing how this level of resistance here was very, very important for the bonds to break above, because especially it needs to close above these wicks. So basically when you're looking at, especially the day before's wick, if we can break and close above that level today, then that would give some positive steam. But basically, the bonds are beginning to show some strength and are starting to break above this level of resistance. This isn't an automatic reason to be bullish on the market, because the bonds, the relationship between the bonds and the stock market is most prevalent when major levels of support and resistance break. So if the bonds break above a major level of support, that's when usually the market gets affected by that bond movement as well. And if the bonds break above a major level of resistance, that is also when the market would be bullish. Does that make sense? So if the bonds break below a major level of support, the market would be bearish. And generally, that's basically how it works. So this little micro move so far doesn't really, it's not doesn't really mean that it's the most bullish. If we get like a break above this level, it would be way more bullish on the bonds and the stock market. But yeah, let's see. So the dollar is showing some strength. The bonds are also showing strength. All right. So next, we're going to have to take a look at the NASDAQ, large tech stocks, and then the Russell 2000. Okay, so first of all, Netflix and Tesla have earnings Wednesday after hours. So, which is today. So basically, let me go ahead and show you a picture. Okay, so basically, you can see that Tesla and Netflix both have earnings Wednesday after hours. And the large banks and everything are continuing to have earnings Thursday and Friday. So, and this morning, basically, Goldman Sachs is also going to report earnings. So Netflix is getting a huge move to the upside prior to earnings. Basically, earnings run up. And Microsoft also had a huge move because they released news on new pricing models for their subscribers. So basically, this is going to increase the amount of money that the company is going to be making. So Microsoft shot up as well. So obviously, as Microsoft shot up, the NASDAQ also continued to shoot up. Nvidia also continued to shoot up. And when you take a look at AMD, it was doing well. Apple, obviously, whatever. So a lot of the large other stocks, right? They didn't do amazingly. They either held support or they were slightly red, but primarily due to Microsoft and Netflix, the NASDAQ was green, obviously. So this is basically just really, really bullish. And the prior levels of resistance that we're going to be basically looking at on the NASDAQ are these highs here from back in January of 2022. So basically, you can see how this level acted as a major level of support and resistance all throughout this time, right? So we're about to come back to that level here today. Well, you know, in the next few days potentially. So we're very, very close to a major level of resistance. And relative to where the SPY was, right? So the SPY is currently like 2% away from that major level of resistance, right? As we were just looking at it. The NASDAQ is only about 1%. So the NASDAQ is clearly much stronger than the SPY at the moment. It's doing way better on this bounce. And Microsoft and Netflix really, really helped. All right, next, go ahead and take a look at the IWM. So the IWM, this red candle made everyone really, really bearish. Once people were bearish, they just ripped it to the upside. Absolutely disgusting move to the upside. You can see that it's not as overextended as the NASDAQ and the SPY, but so there's still technically a lot more room to the upside. But the NASDAQ is relatively much stronger than the IWM because clearly, you know, obviously the NASDAQ didn't come back and retest these lows, whereas the IWM did. The NASDAQ is relatively like over here basically compared to what the IWM is. So yeah, you know, we're just gonna have to key off of the strength of the NASDAQ, but basically, you know, the only major level of resistance left on the IWM would basically be this high here at 199.26, and we've had this level for quite some time. We were just watching this level, so yeah, we're gonna have to see how the IWM responds there as well. So I hope this gave you guys a good overview of basically what's going on with the market. And yeah, basically we just have to play alongside the momentum during the day, and definitely, in my opinion, is not the time to start being swing long on the market. You'd rather just wait, take shorter time frame trades if you want to play long, right? And then just wait for a higher price before adding to shorts. All right, so I hope that makes sense. I hope you guys have a wonderful night, day, and we're gonna kill it tomorrow. Make sure you guys tune into the stream. I stream daily from 9:30 a.m. to around 11:30, 12 p.m. every day. And yeah, Hope you guys have an amazing day. Take care. Have a good one.